Well, hello, you trader nerds. Welcome into a fabulous Tuesday, even though it feels like a Monday, after I saw about 20 dead skunks in the lovely city or the lovely state of Tennessee as we went up to Pigeon Forge. And my wife says, I don't know what my marijuana smells like. She knows what it says. She says that a skunk and pot smell eerily similar. And I thought, well, I'll be darned. Now I can smell the skunks, and there were about, I'm sure I saw 20 on the road dead, squished. Like we have possums and armadillos here in Georgia, in Alabama. Man, Tennessee has got the skunks. Didn't see a single bear, but I don't know. We had a great time. Had a great cabin that we stayed in, and it was just a wonderful time to get away and go to my daughter's dance competition. She brought back 5 medals, so she was very happy. So it was a great time. And I missed all of y'all for a couple of days, but real traders never trade alone. They trade with their fellow nerds. We got DB in the house. We got Dwayne, who is probably one of our longest ever people that is with us all the time. Dwayne has been here like since the very beginning. We got Hal with us, we got Jim with us, we got John, we got Matt Jollywally, who was one of the originals. Rick's been here forever, Stacy's been here forever, Thomas and Vicky with a Y. So welcome in, y'all. Now, today has been interesting. I've been doing a little scalping today as I'm trying to learn how to scalp. And I was up $60 at one point, and I was so excited. And now I think I'm at 33. We'll see in a minute. Let's see how I'm doing scalping. I'm up $33. I had given it all away, but I'm just trying to learn. That's all I'm trying to do. And I'm scalping against my existing deltas. And we were over $80,000 earlier today. So up 3,600 on this account for the year, up $50,000 on all of these, and life is good. We're having a great, great, great year if we can just get this scalping down. So nonetheless, as I was scalping, I was watching VIX's 15. I was watching the AD, and these things were totally not in sync. You can see this was going up. AD was going up. It's at 162 now, and the market was going down. And they never were in sync. And the market, this went up. This was going up and down and up and down. And then you just see we just kind of flatline. And really, there's not a lot of volatility in the market today. That's one of the troubles with scalping on a day like today, just not a lot of volatility. So the AD high was 219, AD low negative 41, and the market has just not been following the AD. You see this? This is flat, and this is up and down. So most of the time, AD will lead. And yep, Matt Jollywally's been here since very beginning as well. So roll tide, even though we lost to that school down the road, the old nasty Auburn Tigerettes. Anyway, that's enough of that. But the market is doing nothing, y'all. Look at this. I mean, it's just flat. Market is flat on the day. Not a lot of volatility. It's almost like some of those people in the Hamptons have taken off an extra day after President's Day because there's just not a lot of volume going on. And one of the things that I was watching today, let me show you this. One of the things that I was watching today is an indicator. Have y'all ever heard? I used to use this way back in the day. It's called a cumulative volume delta. And it basically tells you if, there are more sellers than buyers. And it kind of shows you, buyers are coming in here, then they're undecided. Then the sellers have come in. So I was using that a little bit in conjunction with CCI and the 8 and 21 exponential moving averages, and still can't make but $33. Isn't that great? So let's look at this. This is still, y'all. This is what I call the Trump effect. We don't know how to take President Trump. We have no idea what to think. And so the market has really just been undecided. Okay, maybe he's not that bad for the market. Maybe he's not that bad. Maybe we'll be okay. It's one of those things. Yeah, that West Georgia school, the old Auburn Tigers, doggone. I watched a little bit of that game while I was in the mountains, but not a lot. So, we're figuring out here what we think about our president. And what we've got is a cup and saucer. I don't know if that's a cup and saucer, y'all, or at all, but this looks like a handle and this looks like a cup, doesn't it? So we got a cup and saucer forming. What does that mean? I have no flipping idea because I am good at investments, but I suck at trading. Even though we're having a good year trading, though, everything's good. Oh, with Friedemann? Okay, thank you. So everything looks really, really good. And yeah, let's look at the big green monster. I thought this was interesting. Look at the big green monster. Check this out. Look at there. Where are we? This is amazing, right? We are interacting with the 50% line. And you would expect us to hover here and this line to become support and resistance as we go above and below the 50% line. So we are fairly priced and we're at the 50% line. If you were to put a gun to my head and say, which way do we think that the market would go based on this, it's probably want to go to the point of control. But the longer we stay here, the point of control will eventually shift up here. Okay. So we've got a little downward pull on this vacuum here and this point of control here. But as I say, the point of control could easily move here the longer that we stay in this area. Let's look at the NASDAQ and see what it looks like. See if we're fairly priced with the NASDAQ. Look at this. Oh, behave my heart. Now, this is kind of a bullish setting, right? Even though it does want to pull to this area and it does want to pull here, this is oversold for the fair value zone above, which is very, very, very interesting. Can you imagine if we went from the 22,179 to the 22,800 right there? Wouldn't that be something? So if the market jumps, here's where we're going. If NASDAQ jumps, it's going up there. So this is more of a bullish chart on the NASDAQ. So interestingly enough, let's see how our accounts are doing. So we're down $30 on the day, but we're up $3,600 year to date. On all these accounts, we're up $50,000. Everything looks really good. Let's look at our positions and see what we've got in here. Let's click this one. This is the one we trade publicly. So we've got our E-mini positions. We've got threes and fives, threes and fives, threes and fives, threes and fives. These are the hedges that you'll hear us talking about all the time. And most of the time, the hedges will lose money. As you can see, these hedges are down just a little bit on the day. And the open, they're down $716. So nothing to see there. Then we have Bill doing what Bill does, makes us a little bit of interest, right? A little bit of interest every day. So that's up. And then we've got our TQQQs. Oh no, we've got the dreaded in the money. What does this mean? TQQQ is at 89.72. And y'all, we've got an 86 call and a 90 call. Look at that. Yeah, we're in the money. So what do we do with those? And look, our put is gone. Look at there. We don't even have a put anymore. So it must have closed at 50% profit. So we do have, even though we're up a little bit on the day on our calls because NASDAQ is basically break even and we're just getting a little bit of theta decay there. But everything looks really good. I don't see a problem with those. I mean, I don't think it's an issue where I would go, I'm going to roll them today or anything. I think we'll just leave them right there. Down 293 on that, down 172 on that. And then it's hindsight's 50-50. I would love to say I wish I didn't have them here because we'd be up 3, 4, 500 more dollars on the year, be up over 4,000 on the year. But that's fine. We're good. We've got plenty of time left on these things. They got 31 days. And if we want to roll them out here in a couple days, we can do that. But I think they're fine now. All right, so let's see what our MES is. We got put debit spreads and a naked put at 30.3%. When this puppy gets to 50%, y'all know what that means. That means, baby, that it is time to put on another one. And that would mean that we have 4 fully paid for put debit spreads. Isn't that great? Love it. So let's see how our little hedge is doing for today. We'll make sure we got a hedge in there. I agree to whatever that said. I don't know what it said. But we've got MES and TQQQ. So let's see how our hedge is looking. It may be gone by now. Let's go to red here, move this up to 40 points. Why 40 points? That's where I'm comfortable. That's where I think that volatility would be. Let's go to rough. But remember, we've got to change this TQQQ to 60% drop. If our TQQQ, oh, so we're doing good, y'all. We got $11,000 hedge. We're perfectly hedged to the downside. Matter of fact, I could add a 111 today since we've got so much cushion here. but I think we'll wait till we get a little better entry, right? We've got one in the books now. We'll let the other one, we'll let it stew a little bit, and then we'll put another one on. So we're perfectly hedged to the downside. And I would not be trading this strategy if I did not have to, if I did not have the hedges to the downside. John says, Sweet Bobby, why do you prefer to roll rather than accept the profit and get back in at the next downturn? You talking about rolling the calls? John, is that what you're talking about? Because we will have profits, right, on the stock moving up. But I would, let's see.
Yes, Bobby, that is what I meant.
Yeah, I don't know. I'm new with covered calls. Maybe that's the way to do it. Just let them be called away and then get back in at another time. That's fine too. I don't necessarily mind that. Um, we would have got our money from the stock going up to our calls that originally was about a 25 or 30 delta. So take our profits on the entire trade, let those shares be called away, wait till we get another downturn and move back in the stock. John, I'm not opposed to that at all. Not opposed to that at all. I'll see as we get closer to expiration, maybe that 21-day sweet spot. I'll kind of see what we can do then. But like I say, y'all, I've never really been a covered call guy. Some of you guys may have, and you may say, "Hey, Bobby, it'd be better to roll it, or it'd be better to go ahead and get your shares called away." I don't know, but I got a feeling that we're going to see a lot more movement in the TQQQ, even though it's at 89. I mean, I can definitely see it being in the 80s again, or the lower 80s before this thing is called away. So yeah, I'm not that concerned about it. And two, look, I mean, we're only down 290 on it. I mean, it's not like these things are horrible. I really like these covered calls. I think they've added some timber, so to speak, to our portfolio. And that's what you use when you're talking about your intonation on an instrument. It's added some timber to our portfolio, to our repertoire of what we're doing. But I'm real happy with what we're doing. I really am. I want to get this scalping down. I know a lot of y'all really get the scalping down too. And my buddy's up. He's only up about $3,000 today, and he said it's a tough day scalping. He said there's no volatility in the market today. And I see that as I sit here and go, oh my gosh, look at this scalping. I mean, I guess you could say, what's up, Bobby? It's down. Bobby, it's up. Bobby, it's down. Bobby, it's going to go back up. And it does appear to be a range day. Remember, 80% of our days are range days. Only 20% are trend days. So in these range days, it kind of makes it harder. You would think it was easy, right? When it goes to the top, Bobby, short it. When it goes here to the bottom, long it. But that is a lot easier said than done. Like right now, are you willing to go in and go long the market here? When AD is stretched just flat, are you willing to go long? I'm not sure, because AD is flat and the market is not. Look at that. It is not following AD today. So I think I could really get into some trouble if I were to go in and do a lot of scalping today. And that's why I like scalping against my existing deltas. Let me show that to you just for a second. For those of y'all that hadn't been in our Muscadine Mafia sessions, watch this. Let's say that you think the market's going to go down, right? Let's go back over here. Let's go to our scalping. What you could do, go to the trade tab, and what's this? See my 148 right here? Y'all see that? What's this? If I sell one, now I'm down at 67 deltas. Y'all see that? And if I sell two, now I'm at negative 13 deltas, right? So you can scalp against your deltas and basically say, okay, I'm going to hang out here all day and just maintain a little bit of negative deltas in case this thing continues to go down. So as you can see, we've already lost $13 on that, but you really don't mind because, well, that may be a little bit of a mind. So let's get out of it now. I just wanted to show y'all that. Let's see if it'll go back down. There we go. $34. Make me another dollar. Come on, make me a dollar. We'll get out. So now we're at 33. We're at 34.50. We made $1.50 on that. So you see how you're scalping against your existing delta. So you really don't lose. I like that. If I put on one contract, I definitely don't lose on my deltas. right? Because it brought it down to what, 60 something? And you go and the market goes up, my overall account makes money. If it goes down, I lose on my scalp, but my overall account is in better situation than it was if I hadn't put the short in. Take my $30 and go to Applebee's. It is super easy to see notional Ed in hindsight. It sure is. It really, really is. Ed, do y'all have skunks in Louisiana? There's a bunch of skunks down there. Oh my goodness, we're already. Oh, that's sorry. I thought we were down 200 something dollars.
I don't think skunks are, I think they're everywhere, are they not?
We don't have them in Georgia, not that I know of.
Really?
Yeah, but they were in Tennessee, Ed. I saw about 20 dead ones on the road. I'm like, oh my gosh, poor little things. And I hear they're great house pets if you have their little stinker thing taken out. And I hear they're like a house cat. But then I say, well, why instead of getting a skunk when you just get a house cat?
And then what about rabies?
Yeah, you didn't have to worry about rabies and all that kind of stuff. And
So what drove them out of Georgia? Like the Bulldogs drove them out of Georgia, or
no, I don't think we ever had them in Georgia. I've never seen one in Georgia. Matt says, in my 26 years of living in Alabama, I never saw one in the wild. Yeah, I've never seen one in Georgia.
I've never seen one in the wild myself, only like dead on the road.
Y'all remember when you used to watch Looney Tunes, Bugs Bunny, and all that? Every time Pepe Le Pew would go on, I'd be like, that's the time for the bathroom break. I never liked Pepe Le Pew. Kissing all over that cat with the paint and everything. Yeah, I never liked that.
Hey, Bobby, I want to go back and touch base on your covered TQQQ. So you sold these calls, and I'm gonna I don't know if there is a right answer for this. So
Yeah, what's
I'm
the
just
answer,
having
Ed?
I'm just kind of generating some discussion. When you sell the call, you're somewhat committing to sell the underlying if it goes above there, or roll. Those are your choices. So you're looking at the roll, which, you take the loss and the call you sold and you roll it out and you wait for it to become a profit. But in the meantime, if that call in a covered call is in the money, then that delta has gone up on the call since you sold it. And it's kind of starting to a little bit mimic the delta of the underlying, right?
Mm-hmm.
Which is a full delta. It's for every dollar move in the underlying, it moves a dollar because it is the underlying, whereas the option might have a 50 delta where it moves 50 cents in relation to the underlying, for instance. So just looking at the call that you've sold against whatever the underlying is TQQQ here, I'm just kind of thinking out loud as you present this. And I'm thinking the call that you sold, if you're pulling that up now, it looks like I'm on my phone, so it's hard to see. But that's how much that call is going to move with the underlying. So like you can look at your in the money call and whatever delta that is, it's probably 60 or 70 or something. It's high. It's got to be. So if the market continues to rally, your underlying is going to go up a little more than your call will go down until your call delta is 1, which would be deep in the money.
Mm-hmm.
So you do still have a little bit to gain by just letting the thing play out and get called away, I think. And then if the market has a pullback, the underlying is going to fall faster than the call is going to increase in value because of the opposite of what I was just saying. So I don't know what the answer is. It might be trader preference, but that's just kind of the way I'm thinking it through. And so, my natural instinct in this situation would be, well, why don't you let the 90s get called away or whatever in the money, when let it get called away and just max out the money that you're going to make on that sold call. You realize all the extrinsic you did plus the appreciation of the underlying up to that strike price. But maybe let the other one roll. Like, I don't know, maybe you want to maintain, and this might be a rule that you want to think about or figure out or whatever, just keep doing it somewhat discretionarily. But I don't see the harm in letting it just get called away from you because you have maxed out the extrinsic that you sold on that call. And then you can just buy the TQQQ back allegedly on weakness. In theory, you'll have a week day or two where you can get back into it. And then my final thought is this
Or
an
sell a
IRA?
put, or sell a put,
Or
right?
sell a put to get back into it. I mean, that is the way. That is the way. And sell that put closer to the money, depending on how aggressive you want to be to get back into those TQQQs. But yeah, that'd be great. selling at the money, slightly in the money, whatever, and capture a whole bunch of extrinsic and get back in with a little bit lower cost basis.
Yeah.
And then the final thing was like, is it in an IRA or tax qualified account, or is it in a taxable account? Because if it's in an IRA account, to me, I would just let it get called away and buy right back in, because you really don't have gains or losses to worry about per se in that situation. Anyway, that's all I wanted to throw in.
I like that, Ed. You're a smart guy, Ed. I like
Well,
you chiming in.
I like to spin the wheels, and since you invited me in on that skunk thing, I thought I would delve back into this while you had me.
Yeah, I like that though. And this isn't an IRA, so it probably is a good idea. Just let the thing be called in, and then also a nice plump, close to the money put. Look at this. I mean, you could get in, what, $300-400 there, right? Just for selling an at the money put, almost $500 if I sold an at the money put. That'd be great.
I'd almost say maybe do it now. I mean, how in the money? Let's see. I can't see your strike. It's like 3 points in the money. Is that right?
Yeah,
Four?
it's 86 and the stock's
Okay.
at 89.
So
Yeah.
about a 4-ish% downside. I don't know. Maybe selling a put before you get out is a little aggressive, but
Yeah, I like it though.
it's all something to think about.
Like we say, this gives us options, and I really like that a lot. Let's make sure I'm not paying any interest at all. Yeah, it says pending margin interest. Let's see, my cash is 68.57. I've checked in this other day. Now, settled cash is negative, Ed, so it should be positive in a couple of days, right? I think I sold some bill one day last week, and I don't think it's settled yet. I think
the bill should settle. It should settle overnight.
Okay,
so your cash balance should settle overnight. It's a 1-day settlement now.
So should I sell another couple of shares of bill?
I think you do need to sell a little bill based on what I'm squinting to see here. And if I'm wrong, well, I'd rather you lose a little interest than pay a little. But
let's close two shares here.
Yeah, you're not in a bad situation. It's not a big deal, but
just
for tweaking purposes.
Yeah, we want to make sure that we get. Let's see. So now let's go over to this and see what that says.
And if your cash position's bigger than your settled balance, you should be okay tomorrow.
251 compared to 159. So that'll.
I think you should be okay tomorrow. Yeah, the margin interest is going to be what it is. That's no big deal. Don't sweat that.
Y'all remind me to check that tomorrow, because I just don't like paying margin interest if I don't have to, for sure. Okay. But this is good, Ed. Look at this. We're up $3,600 on the year in this little account. That's pretty good.
Yeah, you're killing it.
Yeah, doing great. All right, y'all. Y'all have a great rest of your day. I will see all of y'all tomorrow.